All right, good morning, ladies and gentlemen. Today is Wednesday, October 30th, and it's Fed Day, right? Today is the day that the market is expecting the Federal Reserve to lower interest rates for the third time in a row. The third time this year, actually, and got the market up at all time highs. We had the GDP number come out at 1.9% GDP growth this morning, which was actually better than expectations, but you know, under 2% GDP growth. We got the stock market basically hit an all-time high the past couple days, ticked an all-time intraday high yesterday, and so there's a lot going on, right? A lot going on. And so, real quick, we'll dig into the charts here. Take a look at. Before I get to the S&P, I just wanted to mention that we got a couple of open trades that are going to get closed today ahead of earnings. Both these companies are releasing earnings tomorrow morning before the market opens, and so as you guys all know, we close those open trades ahead of the earnings release because you just never know. Boy, I've seen a lot of really wild moves on earnings so far this time around. Right? You get these companies, you see them, they come out with earnings, and first thing the stock does is tank real big, and then 5 minutes later it's up and all over the map, and so you just never know when it comes to how a stock's going to react over earnings. So anyway, that's why we close them. So we get into there's a lot of details in the documentation and talked a lot about it in the past. All right, so here we are. S&P 500 on Monday, we had an all-time record close. Yesterday, actually intraday, we poked above the all-time high in the history of the world. So call it 3048. 3047 and change actually, but yeah, so I mean here we are up at the all-time highs, and as you know, this vertical line that I've had on here for a while represents the fact that with the Fed is coming out with the rate decision today at 2 o'clock, and then of course after the rate decision will be Jay Powell's press conference and Q&A, and that should be relatively interesting considering I mean the Fed's cutting rates with the market at all-time high, and on one hand they've and I mean they've been doing this little song and dance for a while now. They've been saying the economy's in pretty good shape, the economy's fine, things looking good, and then of course everyone asks them why they're cutting rates if the economy's fine, and they dance around that and basically say, the first one, this was what I believe they characterized as the mid-cycle adjustment, right? I have these prior Fed days circled here because, as you know, sort of one of my long-standing themes here, going back to the beginning of the year practically, is that the market has a habit of reversing on these Fed days, right? Big run up over here in June, July Fed meeting. Um, they lowered rates, and then you see what happened. Subsequently, got a bit of a correction. Now, of course, there was some trade war headlines the following day. Then you got a rally from August into September. You had Fed day here, and then literally the next day, market kind of topped out here, and then you had a subsequent correction. And so now we've just had yet another run up and a Fed day. And so, yesterday, if you look at a candlestick chart, yesterday's kind of, I was sitting here I was watching this in like the last few minutes of yesterday's session, and it was literally like a gravestone doji until the last minute. Right? Which was kind of interesting. I thought that'd be kind of interesting, have a big run up and then a gravestone doji candle print, which back in the old days was potentially indicative of a reversal. But so anyway, back to the whole idea that here's a prior Fed meeting in April, big run up into that, 8% correction, and then of course you go back to there's the last rate hike, right? It was September 26th of 2018. I got it circled there. That was the ninth rate hike, and that set off. In theory, I'm sure there was other contributing factors, but wow, that was weird. I just saw a really big, really huge sort of spike down and rally on the. That was weird in the futures. Strange. Anyway, so there you go. Um, you know, Everyone's calling this a breakout. I heard plenty of guys on CNBC saying that saying I swear I saw some guy yesterday that says we think this rally is just getting started, right? And I mean, here's the thing: the S&P as of yesterday during the day was literally up 30% from these lows back here on the low was on what Christmas Eve, right? Christmas Eve was the big was the actual closing low there. And then on the 26th, that was the day after Christmas there. So that was some weird stuff. I mean, everybody was in holiday mode. The market had been tanking, and a lot of strange stuff sort of transpired these few days here when everybody was more concerned about the holidays and what they were doing than they were the market. But miraculous turnaround, and up 30% for off of those lows. So it's kind of clear that to me the market seems a bit stretched here. Here's something interesting though. Whoops, let me go to this chart. Here's my chart where I keep the RSI on here, and interestingly enough, sort of based on the RSI, not in overbought territory. However, there is a bit of divergence here on the RSI. You figure, there was the all-time highs, and now there was all-time highs, back over here when the market was hitting these highs right up against that trend line. And then of course, now you've got new higher highs, but RSI has failed to make a higher high. And of course, that all depends on what happens later today. I mean, the market could reverse and just take off to the upside, and if we get a rally from here, this RSI could get back into overbought. But that's a little bit of a caution flag, I guess you could call it. So now let's see what else is pertinent to look at on this chart. Oh, so I had like this little sort of triangle, wedge, whatever you want to call it. It's kind of like a big triangle drawn on here. And of course, we broke out of it, right? This was the first major resistance, or the first, I guess, near-term resistance, you'd say. This is the major resistance, right? You go back on a weekly chart, and I mean, look at this. You got several touches of this, and you got that rising trend line up there that has yet to be broken. And so, boy, the funny thing, well, this line actually kind of on the weekly chart doesn't line up, but look how close we are right now to that, right? Look how close we came over here. We came really close a couple of times to that trend line, and then actually touched it, right? Actually touched it right here, like a couple of days before Fed Day back in July. So anyway, long story short, anything can happen from here, right? But this trend, this overhead resistance trend line has been containing the price for since the beginning of 2018. I mean, this is a 2-year chart here, and so I started this trend line. This was the crazy big run up in January, right? The parabolic run up in January that terminated abruptly. So we're in a little bit of a precarious spot here, and the idea that a quarter point, Trump came out and yesterday and said, the Fed doesn't know what it's doing, and it's kind of humorous in a way that he's kind of right before the Fed meeting that he's going to come out and say they don't know what they're doing because all these other countries have negative interest rates and this and that, and so I can't imagine that a quarter point rate cut is going to make all that big of a difference at this juncture right here. So there's the S&P. It would be extremely ironic to see it reverse today and start and start any sort of a meaningful downtrend, considering that it's happened so many times that I think people finally, and I've been talking about that exact thing for who knows how long now. And then he rallies from here. It's going to be interesting to see once it breaks above this, then hey, who knows? But in theory, look at today's low closed that gap. It looks like. That's really strange because even on my S&P chart, there's like this huge sort of spike down. I want to see if humor me for a minute while I look at the 1 minute chart. Wow, it's even on. Yeah, something crazy happened there in the span of like 2 minutes. Huh. I mean, it looks kind of crazy. So yeah, that was really, really odd. It was almost like a computer glitch or something. That is very strange. A little computer glitch that took the market down. Yeah, like 8 points within a couple of minutes, and then right back up. Huh, strange. All right, so quick look around at the other indexes. Here's one nobody cares about, Russell 2000, just zigzagging in this big sort of. There's also kind of a channel here too. You've got, and I mean it's kind of important because this is the time of the year. We're getting into there's something called the Halloween indicator, right? We're getting into the time of the year where, seasonally speaking, small caps tend to do well, and sort of it's sort of a good measure of risk appetite, and quite frankly, I mean this market needs to broaden out, right? So there you go. This thing has just been range bound literally since this sort of crazy V bottom back here, and so this was mid January. So since mid January, Russell 2000 has been range bound, and there's the all time high way up there, and it's a long way back. So anyhow, the Dow the Dow has failed to make a new all time high here, and so that's a little odd, but and I hadn't drawn a downtrend line on the Dow yet, but what the heck, might as well. So there you go. So there's another sort of what do you call it? A little bit of a divergent type of indicator there. Little divergence between the indexes because you got the S&P up at an all-time high, which obviously seems way more important to me than the Dow. But anyhow, so yeah, you got a couple of big drags on the Dow, Boeing and I think Johnson and Johnson or whatever. But so there you go. And then of course the Nasdaq 100, I should say, another all-time high. Big sort of rally up, and look at these past few days here. So that's closed the gap. There's a pretty big gap. I won't say pretty big, but there's a gap right here on all the indexes. Right. Go back to the S&P here. This gap right here is. I'd be surprised if that just like totally went unfilled for the rest of our lives. So I might just mark that on here as just sort of and it's just sort of a little if we do get a little pullback or correction, which would seem reasonable. I mean, it would seem reasonable. The other funny thing is that, and I'm trying to think, I'm trying to think. I lose track of time. When exactly the phase one of the trade deal or whatever was done, and I'm wanting to say it was like on a Friday or something, but anyway, phase one of the trade deal, which hasn't even been signed, and then yesterday they came out and said, well, it may or may not be signed or finalized, in November, and so like the whole trade deal thing a year ago, the market was moving based on the trade war with China, and here we are still going on. So it's kind of hard to tell, but you can't argue with the strength of the market. You can definitely argue about why it's so strong in the face of what would seem like all sorts of things. And I've seen and I've also seen some charts this week. I think it was Robert Schiller put out a chart that showed how basically how overvalued the market was compared to earnings, right? And so, I mean, there's still that school of thought out there that the market moves based on earnings, and earnings are not all that not all that robust, to be honest with you. And so now the big thing is that everyone, the guys come on TV and they say, well, we think earnings will pick up, right? Like we're at the trough of earnings, and they should get better from here. So that's really kind of hard to tell, what's going on and how much of this macro stuff is affecting the market day to day. A lot of weird stuff going on. The most interesting thing today is going to be, listening to the questions and answers and Jay Powell explaining about this overnight repo thing and the not QE4, where they're creating, $85 billion dollars out of thin air to purchase treasuries, right? And then CNBC came out with an article today that the Treasury Department's thinking about uh, issuing 50-year bonds. That's kind of interesting. So, a lot of weird stuff going on behind the scenes, but it is what it is, and so here we are. We got these open trades. And by the way, with earnings season, as I pointed out, a couple of these things are going to get closed today. It's these bottom two actually that have been open for a while. So I've got them sorted by date here. I just wanted to go through real quick and take a look at these, and not much to really say at this point. We're kind of getting towards the end of another cycle, right? You guys remember it wasn't that long ago. I guess it would have been, back towards the beginning of this month, a few weeks ago. That a few weeks ago, we were back to where there was like no open trades, and we were waiting for stuff to trigger. And then, sure enough, little by little, the majority of the pending list, the stocks that stayed on the pending list, ended up triggering. So it is what it is. The stocks triggered in, and now that we're in earnings season, they're kind of getting weeded out based on earnings releases. And also, a lot of them recently have gotten closed based on like them actually the trailing stop finally catching up. Right? We had let's see, Wendy's, a couple of these that got closed here recently. Here's Wendy's. That thing had been open since around the beginning of October, and this was kind of a weird one because basically, like, the big move happened in one day. There was some news here, but you can see it triggered back here and then ran up, past the stop, or past the target, I should say, and really nice sort of uptrend, and then is in pullback mode now, and the trailing stop had come all the way up to just underneath the target there. So there's a couple other ones that closed recently. This AutoNation, boy, this weird sort of 1 day spike down there. That's kind of crazy. Let's see what else. WLH, yeah. It's another one. This I had pretty high hopes for this one, but kind of it broke out of that channel and then managed to run up just a little bit and then just turn right back around. Let's see. I'm looking at a few of these closed ones now. Here was another interesting one. Big run ups and then a fade. So, and look at that. The fade continues today, but there's this one, a parabolic stop actually kicked in. So, let's see. In Costco, that was a biggie there. Costco, yeah, Costco. So we saw a lot of the stocks that triggered back towards the beginning of the month. They had pretty decent run ups. Most of them hit their targets, and then faded back down, and then of course the trailing stop caught up with it. So that's how it goes. And then the ones that keep going, like the ones we'll take a look at here. Um, a few of these have just they just keep going, and so they're going to get closed on earnings. This is the most recent open trade right here. Everything's kind of scrunched up. Um, it's kind of a nice pattern. If this is a good one to switch to a candlestick chart on. Whoops. Where's my candlestick chart? There's one right there. Yeah, it's a hard one. This is a hard one to draw a downtrend line on, right? Because of those weird spikes. So let's see. There we go. That looks fairly reasonable. Still kind of, I mean, that's still kind of an odd pattern, especially this day right here. I don't know what that was about, but so this is the one that's just now basically, which, well, I guess it triggered yesterday at the open. Triggered right around the exact trigger price there, 142. So far so good. This is kind of a crazy spiky stock though. No earnings imminent on this. So, you know, sometimes these things actually trigger in shortly after earnings. I've seen that before. That's always so. Right now, I mean, this is a pretty good looking chart, but just started getting started because it triggered in FLY. This is the one. This is the one last week that we discussed because the trigger was back here, right? The trigger was back here on this trend line break, and then it opens slightly higher the day after it triggered in, and so that's why I have this adjusted target, which got hit by the way, just barely, but it's hanging around up here above the target, and quite frankly, it's got a fairly decent pattern to it. Right now, the stop has drifted up, and it's well past the trigger. It's past where one would have just got in after it triggered, and so far so good, looking pretty decent. Um, Not a bad looking chart, right? It did have a pretty good run up though, and it's kind of stalling out a little bit. So let's see, GMS so far so good. Same sort of thing. This is kind of a crazy chart right here, but so far so good. Kind of hanging in there, up at highs or whatever. So this, let's see, $29. Yeah, not too bad. PPL. This is a beauty right here. Electric utility too. Huh. Here's another case where it would have this one kind of blew past the trigger price, right? And so, but nevertheless, an adjusted target would have been well within reach, and it's pretty nice. Here's the thing: these are only 25-cent increments here, so this is not really an extremely volatile stock. But I remember back when this thing was pending, right? I drew this trend line, and we talked about how it liked to zigzag around, and I remember saying that once it got started moving in one direction, it tended to get some pretty decent follow through, right? And so it's exactly what's happened here. What's funny is that this little that little move there and that little move there, right? So you had, you had a down move and then like sort of a little rebound, and then down move kind of completed this bigger down move, right? And so you got the same thing here. You got an up move and then a correction and then the second leg of the up move, which is, made a higher high here. And so this was, being a utility and all. There you go. There's potentially still some room to the upside on this, right? Kind of, something like this. Obviously, connecting the lows is not perfect, and connecting the highs either. But it's a pretty good move based on a couple of these prior moves here. There's still some room to the upside. So that trailing stop has gotten really sort of tight here. So if this thing, turns around anytime soon and rallies, then that trailing stop, follow it up. But all in all, not bad. I'm just going down the list here. There's not a whole lot of open trades right now. This one's actually kind of nice right here. This is really interesting. There's a target, 94.50. So it's just hanging right around the target. What's so interesting about this particular stock, JEC here, is that this was one of the better recent swing trades from back here in late summer, August into September, right? I remember obviously marking up all these trailing stops, on this one, and so it didn't take much of a dip, and then triggered in again, and so here it is, you know. Kind of running into a little bit of resistance up here at these prior highs, but it's just a real nice, steady sort of march higher here. So let me zoom that in. Yeah, I mean, this is since the beginning of the year. This stock has just been on a tear, right? With a couple of pretty significant dips in between, but it was just interesting to see this thing trigger in again. So, and I'm going down the list. So this, you can see that this one triggered in back here. Well, I guess it was mid-October. So this next one, the CZZ, looks like it triggered in on 10/11, and so far so good. Another one that had something going on back here. Same thing over here. Caught the uptrend, and then it kind of went sideways and started getting squirrely, and hit the trailing stop like right around where the target was back here. Of course, there was a parabolic stop back here too. So anyway, let me look at this. CZZ current trailing stop 1620. That seems fairly reasonable. Won't surprise me to see it drift up a little bit after the close today, but pretty good looking little run this thing's on here. It like has it runs up, consolidates a little bit, runs up, consolidates a little bit. It's kind of running up right now, so kind of interesting. Not a bad looking pattern. Again, this last little go round here, it seems like, and I guess it was just because of there must have been like one particular significant update in the market that triggered a lot of these things in. So I mean, it's kind of unusual, but I think a lot of them triggered in on like a big 1 day rally, and so the following day, like the trigger price was 1505 here. This day it opened at 1544, and so you're talking, 39 cents difference there, and of course, as I've been discussing the past couple of weeks, if a stock, blows through the trigger price, which, as Jeffrey's mentioned before, is basically just sort of, it's sort of like the barrier. It's like a level of resistance, right? And that kind of makes sense if you think about it. Big resistance level here. And of course, like, intraday trader would be looking at that, and then perhaps, on this day when you start pushing through that, then maybe they'd jump in right there. But our system's, sort of designed to be a little bit more laid back and slower and less, less aggressive and that. So, and a couple of ways we've mentioned of doing it is that if it's real significant, and this one wasn't, wasn't too significant of a move, an open higher than the trigger price. It wasn't too significant, but you can always just buy a half a position there and put a limit order for the other half at the trigger price. In a lot of cases, like this last go round, you won't necessarily get filled. If the market's acting a little funky, then like I think last month actually, like in September, market was kind of in a pullback mode, then I suggested just setting a limit order at the trigger price. A few different ways of doing it, but the idea is that even most of these that triggered higher than the actual trigger price have gone on to do fairly well. And then, of course, we talk about just adjusting the target for, to compensate for it, which is basically, basically means that you'd have your target up here, pay an extra 40 cents. If you buy 40 cents over the trigger, you just compensate for it by adjusting your target 40 cents. Stick with this trailing stop, and it's all good. So it was a beautiful looking chart, quite frankly. A really nice looking chart. Let's see, Lulu next on the agenda here. Lulu, same sort of thing, kind of triggered in on a big pop here, but nevertheless, they had the CEO of Lulu on CNBC yesterday. That was kind of interesting. GNRC, this one's getting closed today on earnings. Right, they're coming out with earnings tomorrow morning, and quite frankly, let's see, what's the trailing stop $88, just in the nick of time, right? So because look at that spike high. Now this one, interestingly enough, I mean, our system doesn't know anything about doesn't know anything about anything but the price action, right? But interestingly enough, Generac, they make the generators, and with all that stuff going on out in California now, this stock started with the wildfires and that. This stock has really been on a tear. We talked about this here recently. Look at that. Kind of a similar sort of pattern to way back here. Let me just put closed ahead of earnings. All right, I'd like to note that on here. Perfect time to close this thing too, because you got that run up and then you got that pivot high. That's like a textbook. That's a textbook pivot high right there. And so hey, I mean, you never know. Earnings come out, and this thing could do one of those loop-de-loops, right, and end up way up here, but you just never know. So that is one heck of a chart, though, right? Look at that. Ever since the spring here, it was kind of flat back in January, all the way up to May. It was just flat, right? And then you got this little sort of pattern here, and boy, it broke out of that little flag right there, that little downward sloping channel, and just never looked back, right? So anyway, that's getting closed today. And then here's the very last one, the oldest one, and this one is also getting closed ahead of earnings today. So it looks like it still has something in it. APO, Financial Services. Not really all that familiar with it, with who they are or what they do, but there you go. This one was kind of nice because it triggered in. I mean, this is more typical than a lot of the other ones, where basically the stock closes above the trigger, and you get an opportunity to, the very next day it opened, like, basically right at the trigger. So This is a little bit more similar, I would say. And so this trailing stop up here at 39.75, well, this thing's just gonna that's gonna just stand because it's getting closed using today's opening price. So I would say that hey, this is out of all the examples of how the system works. This is a pretty darn good example, right? Interestingly enough, there was no trade over here in August, but took a nice little sort of winger, reversed, came up here, and I would say the way that it sold off and then reversed is not really a prime example, because ideally what you want to see is like sort of you want to see like a little narrow range consolidation, like a pullback, narrow range consolidation, and then a resumption of the uptrend. This one's a little bit funkier, but it's still worked out pretty good. So it's up here. Just the thing about this is that it kind of looks like it could keep going, but it is what it is. So anyhow, so that's about it. See if there's anything else notable to talk about. I just went through all the open trades, and gains here are pretty respectable, right? GNRC going to get closed with respectable gains, so they're all looking pretty good. I wanted to see if there was anything. There's not a whole lot on the pending list right now. Maybe take a look at a couple of those. Nike is on the pending list. That's sort of interesting. So current trigger's way up here at 93, and so it's still oh boy, Nike's kind of funky here, because this time right here, and I'm not sure exactly what happened here. There was some news, or I don't know what exactly, but it just kind of it had a dip. So this was a full stop out. That's rare, but it happens. you know, just sort of got hooked in back here. But anyways, let's hope the same thing doesn't happen. But my guess is that so Nike's kind of came down and closed this gap. It's had a pretty significant pullback. So if the price sort of consolidates here, this may drift down, drift down, drift down, and then end up meeting the price, here for a rally. So see what happens with that. RNG. This one's sort of this little another one a little sort of flaky, but these sort of high powered growth stocks or whatever, they do what they do. This one looks like it exploded higher on earnings, had a little pullback, and so this one doesn't have much to go until it potentially triggers. Let's look at this. This is a pretty nice one here. And of course, these stocks can come and go from just because they're on the pending list doesn't mean that they can't drop from the pending list, right? Like if this one took a big wing or whatever, it obviously never triggers. So this one actually looks like it's got some potential here. Health services, medical instruments. So let's see. Right now, the current trigger on this is 151. Whoops. Looks fairly reasonable. Right in that area there. So ideally, and that could come down, that could change a little bit, but this I think is what I was talking about before. If I was looking for a perfect example of what we want to see, would be a nice, long duration, orderly pullback, and then a consolidation with some narrow range days, and then basically, a move that starts off like this and looks like that. All right, so this one looks nice. Keep your eye on that. Another good example, looks like a big earnings pop, and then kind of waffling around, and then of course 85. We're looking at current trigger, like right around this area here. Yeah, this is beautiful. Real nice pullback, consolidation, narrow range days. Looking for move back up there. Last but not least, and then I got to wrap this up. Um, this trigger here is down to 76, right? I talked about that one before. So you see how that trigger came down, right? Never triggered in. Now, here we go. 76. So it's amazing how it's just kind of amazing how this works, right? It makes a lot of sense. There we go. It makes a lot of sense. It's fun to look at, sort of how these things. And I mean, this is one wild stock right here. So I haven't looked at the earnings dates on this, but anyway, this one sort of makes a lot of sense too, as far as the technical setup. So there you go. So I'm going to wrap this up. I got something I need to take care of this morning, and we looked at the market. We looked at all the open trades. We went through the pending trades. A couple of the pending trades look really good, and so hey, who knows what's going to happen? Today's going to be a wild day because the market's probably just going to grind sideways and do nothing, and then when the Fed decision comes out at 2 o'clock, and then the subsequent Fed meeting, well, then things are going to get pretty wild. So buckle up. Um, Enjoy the early part of the day, and then things are going to get nuts this afternoon, and we'll see where the dust settles. So, hey, thanks for tuning in, folks. I'll see you here next week.